What's going on, everybody? In this video, we will be going over how to identify a reasonable stop loss. So, earlier in this section, we went over the strategy, and the strategy started out by identifying support and resistance zones. So, in this example, you see all these wicks, all these wicks, all these wicks. We're expecting that if a candle were to break above these wicks, and these candles that cannot close above one another, we're expecting price to push up into the areas in which price rejected in the past. Remember, I told you that price is just a repetition of itself, essentially. So, that being said, this candle did close above this resistance. But now you have to identify, okay, I do see that there's potential to the upside for 80, 120, 130 pips, correct? But now we have to identify a reasonable stop loss. So, that being said, you could either keep your stop loss below the current candle, which is only 18 pips in this instance. That may not be enough room to breathe, especially on gold. Or you can keep your candle or keep your stop loss below the previous candle. Now that's 74 pips. That is a pretty large stop loss, I will say. So I do like to recommend that my beginners start on the higher time frames because those are your largest confirmation candles, that being the 1 hour, the 30 minute. But once you start getting to the 15 and the 5, there's a lot of noise that goes on, a lot of noise. When in reality, the candle just gave a nice, easy push up to the upside to mirror these clean candles that came down. Remember, we're looking for clean candles. Okay, so let me go ahead and create a little ellipse here because I do love trading view, but sometimes it is not so user friendly when changing time frames. Okay, so this is January 6th. So I'm going to change time frames and see if I can get a better stop loss because in this instance, 70 pips may be a bit big, especially when we're only striving for 80, maybe 130. So let's see if we can go and use a tighter stop loss just to see if we can get that risk to reward a little bit better. I'm not a big risk to reward trader. I don't really believe in it. If I see the money on the table, I'm going to grab it. But I do understand that you do want to maximize your risk to reward for what it's worth. So once again, I'm going to change time frames going from the 1 hour to the 30 minute, January 6th. Cool. Got to go back. Got to go back. Like I said, when you change time frame, sometimes it loses your spot, which I don't love. Okay. Cool. So once again, we closed above here, right here. Price gave a bit of a retracement and was ready to go. So in this instance, there was a red candle on the 30 minute, but this next candle respected the low of that 30-minute candle. So that being said, we see a candle still remained above the range. This is only now a 40 pip stop loss because you could use the previous 30-minute candle rather than the 1 hour, which is that 70-ish pip stop loss that I was mentioning to you all. Does that make sense? So when you're able to go down in time frames and just kind of maneuver and see what makes the most sense for your style of trading, it really begins to make a bit more sense. So, as I mentioned to you on the 1 hour, if you were to use this stop loss of 70, 75 pips, it's not the worst thing ever, but you can make that even tighter because there's no reason that if price wants to continue, that we need to be breaking this previous 30-minute candle. Does that make sense? I'm sure I can even go down to the 15-minute and see the same thing. Let's see, January 7th, once again. Da, 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 da. Scroll back in time, back in time. Boom, here we are again. So this is where Price closed above right here. Boom. Man, you can make it as small as you want to and use a 23 pip stop loss. It's just kind of all about making the most logical choice for your style of trading. Like I said, I probably would opt more so for the 30-minute just because it is back in range and 40-ish pips is a reasonable stop loss on gold, especially during a high time of volume. But I mean, man, if you say I'm not one that wants to sit in 40, 50, 60, 70 pip drawdown, man, you see that 15-minute close above after the 1 hour and all, you can use as small as a 15-minute because, man, that's a 24 pip stop, right? For, let's see, a 150 pip reward. I mean, like I said, I'm not a huge risk to reward trader, but I do realize that, man, who's mad about this? Who could possibly be mad about a 1 to 6, 6.5 risk to reward? It's just all about breaking these candles down, breaking down the anatomy of the candles to see what makes sense for your style of trading. But in this instance, if I were to be teaching someone that were to be starting brand new, I would say I would trust a 30-minute. I would trust a 30-minute. This candle closed above. We could enter on the break of the high. The 30-minute candle went in a bit of profit, came back down, but it wasn't too bad. We were nowhere near stop loss. Boom, it's ready to take off. And like I said, more reasonable target would have been the top of this range because it was a clean range to mirror to the left. And as I mentioned to you all in the last section, price just continues to respect, respect the same resistance areas that it previously broke out of. Price is just ultimately a repetition of itself. So let's go ahead and go over an example of the same exact scenario of identifying a stop loss in a sell situation. So it's been kind of hard to identify sells with as much as price has been buying since the start of the new year. But in every market, there's always an opportunity to both buy and sell. So what are we going to do first? We're going to identify an area in which there was a support. Cool. Here's fine. So I'm gonna say that this is a range. Boom, 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 boom. We got a closure below, right? So we got a closure below, and we are expecting price to melt into this target zone here. So I see from 3118, remember these are Forex numbers, but 3118 to 2978, that is a near 400 pip range to take advantage of, right? Cool. So we finally got a candle to close below this most recent support. But this next candle was interesting in the way that it went ahead and broke all the highs for 200 pips before giving its 400 plus pip fall. Okay, so someone might say, well, I don't mind dealing with a 200 pip stop loss if I'm going to make 400 pips, but it doesn't always work that way in which price just directly falls right to 400 pips. And are you willing to sit in negative 130 pip drawdown? I don't know about you, but I'm not. So, once again, this is April 7th, just last week, as this is April 18th, in which I'm recording this. So, let's see how we can identify a quote unquote better stop loss. Cool. So, it's been a lot of volatility in the markets, especially after Trump was elected. So, okay, cool. So price closed below. The next candle wicked up, broke all these highs before it finally melted down and went and covered this whole clean candle. Okay, so if you weren't comfortable enough getting in after price made this big of a high, you could have technically even waited on this next candle to close and got in right here with your stop loss right there. 90 pips for 200 plus pips, right? Okay, we can go a step further. April 7th. Once again, could have got in right here. You could have even gotten in on this next candle. It's just a lot of ways to go about it in which you can maximize your risk to reward and what your appetite is. Like I said, price is very, very, very volatile these days. But I mean, with that being said, you would just lower your lot size because you're expecting price to make larger moves. So in this instance, if stop loss wound up getting too large for you, what's the next thing to do? Wait for a candle to close. So wait for this next candle to close. It's also closed below the most recent support. Boom. You can put your stop loss right here. And this candle kind of retested this area. Boom. And this might seem like a huge stop loss, but I mean, hey, if we're going after 260 pips, I'm okay with 90 pip stop loss. Does that make sense? I mean, that's essentially a 1 to 3 risk to reward. So it's just really about one, like I said, identifying support and resistance zones. And the great thing about trading is you don't have to do anything. If you say, hey man, this stop loss is way too big, I'm not getting in this. All we did was wait on the next candle to close. This candle wicked up, broke this previous low, and we're just mirroring this clean candle that pushed up. Once again, we're looking for clean candles. Okay, and now I want to give one last example of the pre-Trump market. Okay. So this is an example of what I'm talking about when saying using your discernment and understanding when it's time to just take your profits, right? Okay, so this is a big support resistance area, right? You would agree. I mean, there's just a lot of consolidation in this zone. Price didn't do much for a couple days, but price finally closed above here at 8 a.m. And if you remember earlier in the course, I was telling you about those times of volume in which price is ready to go. So in this instance, price closed above. The next candle wicked down, which is 9 a.m., wicked down for a 38, 39, 40 pip stop loss. And price pushed up for 80, 100 pips. So, with that being said, if you were to only have and I'll just break out the tool, if you were to only have a, let's just call it 40 pip stop loss for a 200-ish pip target, what sense does that make in not taking something off the table when you get up 100? You're halfway to your zone. You're sitting up 100 pips. Your stop loss is only 40. So automatically off rip, that means that you were up 1 to 2.5 just right here in basically one candle. You'd be an asshole to not take any off the table. I'm just saying. So, with that being said, it's once again using your discernment. I would love for price to just fly right to targets every single time. But man, there are some points in time where you're like, hey, I'm feeling good about this trade. But just to make sure I secure something from my hard work, let me take a little bit of profit off the table and let the rest run. And you can even break that down off the 30 minutes. So, once again, this is December 9th. Cool. Let's go back, 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 back. Almost there. So once again, think that's a pretty solid stop loss. When you get up 100 and then this 30-minute candle closes red, I would say that's a pretty good spot to be like, hey, maybe we lost a little momentum to the upside. Let's go ahead and call it where we are. And once again, price is just a repetition of itself. So I wouldn't be surprised if it started rejecting off of this area. Once again, once you get more well versed in kind of what you're looking at, you'll see that yes, these are clean candles, but we can't ignore all of these wicks that price also got held up at right here. And what happened? It's like clockwork. I'm telling you, you got right into this zone and it got held up by these wicks. So, of course, once again, we would love for price to just completely mirror this quick fall down. But I wouldn't be an asshole enough to just not be willing to take the profits that are on the table as if I'm not sitting 100 pips in profit after only utilizing a 40 pip stop loss. That is another example of how to just kind of maneuver the market and understanding, yeah, for sure, price could have just kept pushing, but let me take what's on the table as well. It's all discretionary and it all just kind of has to go off of gut feelings. Trust your gut, it's usually right.